Welcome to the deep dive. We're here to cut through the clutter, look at the sources, and really pull out the important stuff to get you up to speed fast. You know how certain companies just suddenly appear on your radar, especially in these really fast-moving areas like crypto and AI? Well, today we're doing a deep dive into one of those, Bitfarms, tickers BITF. We've got a whole stack of recent reports, industry analysis, financials. We're going to unpack it all. The big question we're tackling is what's the real story with Bitfarms right now? And, what's their future actually look like? Our mission today, give you a clear, rounded view of where Bitfarms stands, their pretty bold strategic moves, and the headwinds and tailwinds affecting them so you can form your own informed view. We'll hit their latest financials, that big pivot into high-performance computing and AI, and what the market analysts are saying. And just the usual crucial reminder, this is analysis, information. It's not investment advice. We're here to give you the insights, not tell you what moves to make.
Yeah, and what makes Bitfarms so, well, fascinating right now is that position it occupies. It's right at the crossroads of two incredibly dynamic sectors. You've got Bitcoin mining established, sure, but still pretty volatile. And then this booming, almost exploding AI sector that just eats up capital. Understanding how they're trying to play in both the synergies, the risks, that's really key to getting a handle on where Bitfarms might be headed.
Absolutely. Okay, so let's jump straight into the numbers then, because, the big strategy stuff is exciting, but the financials ground everything in reality. All right, let's unpack this. If you've been watching BITF, you might have seen it tick up recently, like Friday, August 22nd, 2025. The stock was up over 4%, just in one day. That definitely grabs your attention, makes you wonder what's driving it.
It does, and that kind of, immediate jump often reflects maybe some initial buzz around their recent announcements. We'll definitely get into those, but really, to understand the company's health, its actual potential, we've got to look way beyond a single day's trading. We need to dig into the underlying performance, the financial structure.
Right, a one-day bump doesn't tell the whole story. So, zooming out, what's their latest Q2 report, the main financial piece actually telling us about how they're doing operationally and financially?
Okay, so Q2 numbers. They mined 718 Bitcoin. Now that's, a decent amount, but maybe more telling is the cost to produce that Bitcoin. It averaged around $48,200 per coin. That cost figure is critical for any miner. It directly hits their profitability, especially when Bitcoin's price is bouncing around like it does.
Yeah.
Lower cost means more resilience, right?
48.2 per coin. Got it. Okay, so 718 Bitcoin mined. And what about the top line, the revenue for the quarter?
Revenue came in at $78 million for Q2. Now, here's where it gets a little tricky. While $78 million is obviously a lot of money, it was actually slightly below the consensus forecast. Analysts were looking for closer to $79.78 million. Missing estimates, even by a little bit, can sometimes dampen the mood in the market. Suggests maybe growth wasn't quite what the street expected that quarter.
Understood. Okay, slight revenue miss. But I heard their earnings per share, the EPS, told maybe a slightly better story, suggesting some improvement despite missing on revenue.
Exactly, yeah. They reported a loss of 5 cents per share. Now, okay, it's still a loss, but it is an improvement from the same quarter last year when they lost 7 cents per share. The reports frame this as a kind of slow but steady recovery path. It signals, maybe better cost control, maybe operational tweaks are working. They're not in the black on EPS yet, but they are heading slowly in the right direction. It's a step.
In this business, you need cash. Lots of it. How's your liquidity looking? Cash on hand.
That's actually a real strong point for them right now. Their liquidity is quite robust, getting close to $230 million. And connecting that to the bigger picture, that near $230 million, it's more than just a nice number on the balance sheet, it's a serious war chest. In a capital-heavy industry like mining, needing constant investment in new machines, big facilities, and now potentially even more for AI gear, that cash gives them huge flexibility. It lets them ride out market dips, invest in new tech without running to borrow money immediately, and really go after this AI thing seriously. It does set them apart from some competitors who might be tighter on cash.
Okay, so summing up the financials. It's a bit of a mixed bag, isn't it? Solid Bitcoin production, but that cost is notable. Revenue slightly missed the mark, but EPS is improving, and critically, they've got a very strong cash position. Suggests, maybe, careful management in a tough market. But while those numbers tell us where they are now, there's this much bigger, arguably more ambitious story playing out at Bitfarms, one that could completely change what the company is. Because, yeah, they're still mining Bitcoin, but they're making a serious push into a totally different high-growth area. This is where it gets really interesting for their future potential, I think. Beyond the crypto mining grind, they've got this key partnership going with T5 data centers over in Pennsylvania. What's the big idea here? Why this move?
Yeah, this T5 partnership, it's not a side project. It feels like a major strategic shift. It's all about advancing high-performance computing HPC and AI development. And what makes it really stand out is the scale they're talking about. Their Pennsylvania pipeline is over 1 gigawatt. I mean, that's a massive amount of power capacity.
Yeah.
It's the foundation you need for the kind of crazy, intense computing that AI demands.
So they're basically looking at what they already have, these huge data centers, massive power hookups, and thinking, okay, what else can we do with this? It sounds like more than just repurposing, maybe transforming their whole identity.
I think that's exactly right. It's a strategic diversification, and it's a trend we're seeing across the mining industry, actually. Miners are realizing their core assets. The buildings, the power contracts, the know-how of managing energy can be used for other things besides just running ASICs for Bitcoin. It's really a bet on shifting from being, a commodity producer tied to Bitcoin's price towards being more of a service provider, catering to that seemingly endless demand for AI and HPC compute power.
And we have seen other big miners doing similar things, right? This isn't just a Bitfarms idea.
Oh, absolutely. Look at Core Scientific, for example. They inked that huge deal to host AI and HPC stuff for CoreWeave using NVIDIA GPUs. That deal alone is projected, $8.7 billion in revenue over 12 years? That's staggering.
Right.
And crucially, it diversifies their income away from just crypto mining volatility. That's key.
Yeah.
Or Hut 8, they've also moved towards HPC-ready setup, building these super dense data centers, packing in miners or potentially GPUs at like 180 kilowatts per rack. That kind of density is exactly what you need for advanced AI chips, which throw off a ton of heat and need massive power. It shows how these companies are trying to get efficient and really merge mining with HPC.
That really paints a picture of a sector in transition. So, okay, this move positions Bitfarms to use what they have and try to tap into this potentially explosive AI market, a different revenue stream to maybe balance out the crypto swings. But
Yeah.
it's not easy, is it? Entering the AI infrastructure game, competing with the giants, getting the right hardware, that's a completely different challenge.
You absolutely nailed it. This isn't just flicking a switch. Yes, they have power in space, but pivoting to high-end AI and HPC, that needs totally new skills. Sales teams who understand AI workloads, different marketing, different operational expertise. They'll need to hire AI infrastructure specialists, somehow get their hands on huge numbers of those super sought-after GPUs, and then compete against Amazon AWS, Google Cloud, Microsoft Azure, companies with decades of experience. So yeah, it offers diversification, but it swaps one set of risk crypto volatility for another, fierce competition, and the huge capital needed for the AI race. It really raises the question, how fast, how effectively can a company built on mining truly morph into a top-tier AI data center provider?
It's a huge question. The potential is there, clearly, but execution, that's everything. But, okay, it's not all blue skies. Even with this AI ambition, the boards also flag some real, tangible challenges they're facing right now. What are those headwinds looking like?
Well, even with that improving EPS we mentioned, the Q2 revenue miss is a challenge. Markets notice when you don't hit expectations, suggesting maybe the growth story wasn't quite panning out as analysts hoped in that period. And beyond the numbers, there are strategic headwinds too, like the wind down of their operations in Argentina. That wasn't just a small tweak. It was a clear decision to pull back from a region, probably due to local economics or regulatory issues or maybe just operational headaches. But it can definitely impact your overall mining output, your hash rate, at least in the short term.
Okay, so how do these challenges, plus the big AI pivot, affect their overall outlook, especially when analysts stack them up against others in the sector? It sounds like they're in a kind of unique spot, maybe even a bit contentious.
I think contentious is a fair word. Stocks to trade, for instance, describe their outlook exactly like that. Contentious in comparison to sector benchmarks. And they pinned it on that inability to consistently hit the consensus numbers, plus those broader macro factors, regulations, energy costs that hit the whole industry. When you look at typical analyst price targets, you see resistance mentioned around $1.29 and support pretty firm at $1.22. That's a tight range. It suggests that, at least for the short term, analysts see limited upside. It reminds me of something Tim Bowen from Stocks to Trade often says. It's a general trading thought, not specific to BITF, but he says success is often more about cutting losses quickly than always finding the big winner. Highlights the need for careful risk management in these kinds of stocks.
Right, so a tough external environment, internal execution hurdles. To put Bitfarm's situation in maybe even wider context, what does something like the Cambridge Digital Mining Industry Report say about what generally worries miners? Because these are the pressures Bitfarms is under too, surely.
Yeah, that's a really important lens. The Cambridge report consistently highlights energy price swings and regulatory uncertainty as the top two worries for miners globally. And for Bitfarms, with big operations in North America and having just pulled out of Argentina, they're absolutely exposed to both. Energy, usually their single biggest operating cost. Any spike hits the bottom line hard. And regulations, they can change the rules of the game overnight, for better or worse.
So given these major risks, what are miners like Bitfarms actually doing to try and manage them?
The report points clearly to two main strategies: business diversification and geographical diversification. Bitfarms move into AI HPC. That's textbook business diversification. Trying to build revenue streams not tied solely to Bitcoin. And pulling out of Argentina, while maybe painful short-term, could be seen as a geographical adjustment, focusing resources on regions perceived as more stable or cost-effective. Interestingly, the report also notes many miners actually prefer holding crypto reserves Bitcoin, mainly over holding fiat currency, as a risk mitigation tool. Now that's partly speculation, sure, but it also reflects this deep long-term belief in the asset itself, thinking its value will grow faster than cash, acting as a hedge. Of course, that also ties their balance sheet right back to the volatile asset they're trying to hedge against. So it's a different kind of risk exposure.
That's fascinating insight into their thinking, though. A real belief in Bitcoin's future. What about the gear they use, the actual mining machines? That market must be pretty specific, maybe carrying its own risks.
Well, it's incredibly concentrated. That's a
Hmm.
huge factor. The market for ASICs, the specialized chips for mining, is what we call an oligopoly. Basically, a tiny number of companies dominate. Bitmain has something like 82% market share. It's huge. Then MicroBT has about 15%, Canaan maybe 2%. That's not just a statistic. It means miners like Bitfarms are heavily reliant on just a couple of suppliers for their essential equipment. That creates potential supply chain bottlenecks, makes them vulnerable if those big players change prices, and could even limit how fast they can get new, more efficient machines if supply gets tight. It's a really critical dependency that maybe doesn't get talked about enough.
Wow, okay. So we've covered a lot here on Bitfarms. That recent stock jump, the kind of mixed Q2 financials, their really ambitious strategic pivot into AI and HPC, and also the real challenges they face: competition, regulation, costs, even down to where they get their machines. It's definitely a complex picture.
It really is. I mean, Bitfarms is at this incredibly interesting point. You see real innovation, that strong liquidity we talked about, but balanced against, missing some financial targets and operating in inherently volatile sectors. It's a story of strategic growth, this big pivot playing out against a backdrop of market caution and some pretty tough industry-wide realities.
So for you, the listener, looking at a company like Bitfarms, it's clearly nuanced, definitely not a simple buy or sell call based on what we've unpacked. We've seen those positive signs: the diversification strategy, the strong cash position, that vision to tap into the whole AI boom.
Yeah, but we've also flagged the cautions, missing revenue targets, the huge hurdles in actually executing that pivot into a new super competitive market, plus those ongoing risks around energy costs, regulation, both in crypto and now potentially in the broader tech landscape they're entering.
Which brings us to maybe a final thought, something for you to chew on. Given this clear industry trend using data center muscle for AI and HPC, and given how volatile crypto mining just is, how much might Bitfarms' long-term value become tied more to its future as a high-performance data center operator rather than just its Bitcoin production? And if that is the future, does that strategic shift just end up swapping one set of risks, commodity price swings, for a totally new, maybe even tougher set of risks around technology and competition? Something to mull over.